David Owen, your reaction?
Well, it's in line with our thinking. I mean, going into this year, we're expecting the Bank of England to raise rates twice, once in May, again in November. And obviously, the split vote with this bias to tighten further in May doesn't cause us to change our view. I mean, in line with what Guy was saying a moment ago, I'd look for further rate rises in 2019. Remember as well, Mark Carney is set to revolve off the Bank of England in July of 2019. And it may be possible that he can get 2 more rate rises out there in 2019. So you get rates in the UK basically up to 1.5%. They're biased to raise rates. The bar there is actually quite low. The other thing I would highlight, and this came out of the Financial Policy Committee statement on Friday of last week, is the concern they have about growing risk appetite seen in markets, particularly focused around the credit markets, and also concern about US credit. So I just highlight that as being one of the factors which probably is on the margin influencing some of their decisions, but quite clearly they're on target to go in May.
So Nick Bennenbroek, what does this say to investors perhaps in the UK? Are things looking better at this point? Brexit seems not as big a risk. The BOE thinks that things are getting better. They're looking toward rate hikes. Is it a better investment today than it was a month ago?
I think at the margin it is. I mean, some of the risks are disappearing, but still you're looking at a steady economy, a solid economy. When you're not looking at a really strong economy. We're talking 1.5% to 2% growth. And certainly I think today is just a sort of another step. It certainly helps May in terms of a rate hike from the Bank of England. I still think it leaves a second rate hike this year is not quite a done deal at this point.
And what's the cable rate upside?
I think it's actually relatively limited from here. I mean, I've been watching your screens and we saw that quick spike and then it's come back a little bit. Cable's already had a very good week. The transition agreement that was agreed, the Federal Reserve announcement yesterday, and a lot of this tightening was expected or priced in. So our targets, we're looking at 143 in the next 6 to 12 months and 147 over the next 18 months.